What if your new solar panels saved the planet but ended up costing more than your regular electric bill? Or worse, make your home harder to sell? In this video, we unpack how solar financing works, the costs, the contracts, and what zero-down deals really mean. Solar panels sound like a smart upgrade. Clean energy, lower bills, long-term savings. But that all depends on how you pay for them. Many homeowners think they're buying a system, but in reality, they're just renting electricity. No ownership, no tax credit. But there are rising payments, even if the utility rates stays flat. While preparing for this video, I came across a striking example on Reddit. A homeowner signed what seemed like a simple solar lease, $160 a month for 2,050 kilowatt system. But in the fine print, the system only guaranteed 3,400 kilowatt hours per year. That works out to about 56 cents per kilowatt hour, and that's nearly double the average utility rate in his area. Over 25 years, he'd end up paying close to $48,000 for a system he could have owned outright for half the cost. So the good offers fall apart just like that. To avoid a bad deal, you have got to understand how solar financing actually works. There are three main ways to pay for solar. 1, covering the entire cost at once. 2, take out a loan. 3, sign a lease. Let's start with the cleanest option, paying upfront in cash. It's quite a big number, usually $22,000 to $30,000 depending on your system and installer. But there could be a big help, the 30% federal solar tax credit. With that, your final cost might drop to around $15,400 to $21,000. You claim it when you file taxes, Form 5695, and it cuts your tax bill directly. To qualify though, you have to own the system, not lease it. And it must be installed on your main or secondary home in the US. Once it's in, it's all yours. No monthly payments, no interests, and no contracts. Over time, this option offers the most potential savings. But with ownership comes full responsibility. Some homeowners choose to add extras like monitoring, cleaning, or maintenance plans. They can cost an additional $150 to $500 a year. And don't overlook insurance. In most cases, rooftop solar panels can be added to your existing homeowner's policy. But if you're installing ground-mounted systems or battery storage like a Powerwall, you might need a separate rider or even a different provider. Keep in mind, not all damage is automatically covered. Hail, wind, or electrical fires could leave you paying out of pocket if your policy doesn't include them. In one case, a hailstorm wrecked a home's solar panels, and months later, they were still sitting in the yard, waiting to be removed. ADT Solar wanted $20,000 more than insurance covered, and the lender threatened legal action. To avoid surprises like that, know what your insurance covers and who's responsible when it doesn't. Still, there is a major upside for outright purchase. When you sell your home, it's smooth. No lease transfers, no approvals, no added paperwork. The system transfers with the house. And in most markets, that can bump your home value by $10,000 to $15,000, especially if it helps lower the buyer's future energy costs. What if you can't afford to pay everything up front? That's where solar loans come in. You would still own the system, so you keep the 30% federal tax credit. But instead of a lump sum, you spread out payments over 5 to 25 years. In 2025, rates usually start around 4.99% annual percentage rate. But the final rate depends on your credit score, lender, and loan type. At that rate, a $21,000 loan comes out to $120 to $130 a month, roughly the same as a regular electric bill. So you're paying what you already pay but for something you'll eventually own. There are two main types of solar loans: secured and unsecured. Secured loans typically offer lower interest rates, but they're backed by your home or another asset, and that might add some risk. Unsecured loans don't require collateral, making them easier to get, but they often come with higher rates. No matter which one you choose, the way it's offered can change everything. Watch out for loans bundled through installers. The monthly payment might look low, but hidden fees can drive up the total cost. Even the Consumer Financial Protection Bureau has warned about inflated pricing. Take a $21,000 loan at 4.99% interest rate over 25 years. You could end up paying closer to $36,000 with interest. And ask about balloon payments. Some lenders lower your monthly rate by assuming you'll use the tax credit to pay down the loan. But if you don't, you could owe a $5,000 to $7,000 lump sum in year one, or see your payments go up. Read the contract carefully, especially the part about your roof. Some loans include restrictions on what changes you're allowed to make. Need to fix a leak or install a skylight? You might need written permission. And even in some cases, even small repairs can trigger penalties or be used by the company as grounds to say you broke the agreement. Take Bruce, for example. Sunrun approved his solar expansion, then suddenly demanded $7,800 more to move forward.
Sunrun doesn't care about their customers. They're willing to, first of all, they committed extortion by saying, we're not going to do the new install unless you pay us an extortion fee on your original contract. We won't do it. So that is extortion according to California law. So I don't like it when companies commit extortion.
That's why it's key to have a clear way to escalate issues, because once the panels are up, it's much harder to push back. And if you sell before it's paid off, well, most buyers won't take on the loan, so you will likely have to cover the balance at closing. One Redditor had to walk away from buying a home she loved because the seller still owed $70,000 on the solar panels, with $420 monthly payments that couldn't be rolled into the mortgage. Before you sign, ask yourself, is there a prepayment penalty? Is the rate fixed or variable? And can I apply the tax credit straight to the loan? Now we're getting to the most aggressively marketed options: leases and PPAs, power purchase agreements. They are often sold with a tempting pitch: zero down, no upfront cost. The company installs the system and you pay a fixed monthly rate for the electricity it generates. Usually $50 to $120 a month. That sounds simple, but most contracts include a 2 to 3% annual price hike. $90 bill today could become $150 plus by year 25, even if your energy use stays the same. And you don't own the system, so you don't get the federal tax credit. The solar company does. They handle maintenance, which sounds like a perk, but it gets complicated when you try to sell your home. To transfer the lease, you have to qualify and agree to take it over. And if not, you either pay off the balance or you cancel the contract. Both can get quite expensive. Termination fees can range from $1,000 to $30,000, depending on your contract and how far in you are. And at the end of the lease, you typically choose between buying the system at fair market value, that's usually $6,000 to $12,000, renewing the lease, or even having the system removed completely. Leases offer low upfront costs, but they can severely limit your flexibility, especially if you plan to move or want full control over your system. So, which financing option would you choose? Outright purchase, loan, or lease? Have you or someone you know already gone solar? How did it go? We'd love to hear your experience. Share it in the comments below. Whether it went smoothly or not, your story could help someone feel less lost. Real advice comes from real experience. Solar can be a great investment or a 25-year mistake. Don't let pressure or flashy sales tactics rush your decision. Ask questions, read the fine print, get a second opinion. It's your roof, your money, your call, so protect it wisely. If this video helped you see the numbers more clearly, hit like, subscribe, and share it with someone who's considering solar.